Have you noticed how Australia's housing markets keep defying the pessimists? Every time someone says property prices have to fall, the market seems to tap them on the shoulder and say, hey, not so fast. Well, the November house price report from My Housing Market's out, and it paints a very clear picture. Australia's housing markets are still running hot, and in some cities, they're running very hot. And according to the latest My Housing Market report, house prices have risen 9 months in a row, and in November, solid 1.3% jump. But averages never tell the full story. Different capital cities are doing different things, as we're going to discuss, some with very strong growth, in one case up to 20%, and even unit markets, often left behind in tight markets, are now showing strong double-digit growth in Brisbane and Perth. And then there's Melbourne, the comeback kid of 2025, quietly gaining traction after a few lackluster years. So what's really driving this resilience? That's what we're going to discuss in this episode of the Michael Yardney podcast. So welcome. Now, after 5 decades in property, I've seen just about every cycle, trend, so-called crisis there is, and I know how confusing it can be with all the mixed messages out there. You know, everyone's got an opinion, but you've found out that many of them aren't even worth listening to. But that's why twice a week I like to cut through the clutter to bring you clear, practical insights about building wealth through property, proven strategies, smart psychology, lessons from some of Australia's leading experts. And today I'm joined by one of those, Dr. Andrew Wilson, Australia's leading housing market economist, chief economist of My Housing Market, as he discusses his November house price report. And in his view, 2025 is going to be delivering much stronger growth than 2023 and 2024 did. So if you want to understand where our markets are heading, what's driving the big winners, what the opportunities and risks are for smart investors, things you should be paying attention to if you're a homeowner, you're in the right place. So let's get into the conversation with Dr. Andrew Wilson. Have you noticed how our property markets just keep surprising everyone? The latest My Housing Market November house price report is out, and it's another eye-opener. Despite the constant noise about affordability challenges, interest rate uncertainty, the cost of living pressures, Australia's housing market just keeps powering on. In fact, according to the latest data from My Housing Market, home prices have now risen for 9 months in a row, and November has delivered another round of strong results across almost every capital city. And today we're unpacking why this has happened, and more importantly, what it means for you as an investor or a homeowner, and what's ahead for 2026. So welcome to Property Insiders, where Australia's leading housing economist, Dr. Andrew Wilson, and I take you behind the headlines to uncover what's really going on in Australia's property markets. Each week we share the data, the trends, the insights that the mainstream media often misses, helping you make smarter, more confident investment decisions based on facts, not fear. So whether you're an investor, a home buyer, or simply just property curious, this is where you're going to get the real story. And you will today when Dr. Andrew Wilson shares his end-of-month reports and his insights into what's driving the momentum behind our housing markets. Hi, Andrew.
Yeah, good day, Michael. And as you said, it's been another very strong month for our housing markets, our capital city housing markets. Home prices continue to rise strongly, both units and houses. And I expect we would have a similar result when we get the end of the year, final December outcomes. But it wasn't quite as strong as the October result, Michael, and that's not a surprise because our methodology, we use a quarterly data set. We use a quarterly data set because it provides us with more observations. We need that for reliability, of course. The more observations, the better. That's the more sales, the better. But we do move it from month to month. So we do get that underlying trend, not just the fixed 3-month versus the previous 3-month trend. And the point I'm trying to make here is that because we've taken the 3 months ending November as our quarterly set versus the 3 months ending October, we're actually including the full spring market. So we have September, October, and November. Of course, that is the spring selling season per se, and they were all strong results, whereas the October result included the August market, which is, although this year's been quite robust, not as strong as the September market. I hope I haven't lost you, but that's the difference. That's why we've seen not quite as strong growth in November as we did in October, because that 3-month period includes a stronger month to begin with, that is September, versus a relatively weaker month in August for the previous time series. So irrespective of that, it's still a very, very strong result again. The national home price increased up again by, well, not again, it was not quite as strong as the previous month, as I said, but up still 1.3% over the month with the quarter ending November compared to the quarter ending October. And that is, once again, a very, very robust result.
Well, especially if you multiply it by 12
By
and
12,
get an annual result, Andrew.
That's right, Michael. And when we do get to the end of the year, national house prices so far are up by 9.1% over the year. And that's the year ending the November quarter. And that will exceed what we've recorded over the past 3 years. It's well above the long-term average. And perhaps, I'm not sure we'll get to 10% increase, but we'll get close to a 10% increase on the trends for the full calendar year of 2025. Let's remember, Michael, there were many so-called pundits that were predicting those sort of numbers in reverse for 2025. Again, they've proven to be quite foolish in their predictions. So this has been a very, very strong year for home prices and for the housing market. And I don't think we've seen the end of it yet, Michael. We still really haven't seen the full impact of the first home buyer surge that will come through beginning October, courtesy of the federal government's first home buyer scheme. And that's predicted to affect tens of thousands of young Australians, and maybe not so young Australians, moving into the housing market. And of course, they're not bringing trade-ins with them, and we still are perplexed by undersupply in our housing markets, which is, only putting upward pressure on prices and rents, which will continue, particularly for prices with that surge in first home buyers. And we will start to see the impacts of that coming forward over the next couple of months, notwithstanding, of course, we do have the holiday period.
Well, Andrew, we've already seen the impact on the ground, but I remember a couple of months ago when it was announced, you and I were confused, perplexed by Treasury's forecast that it would only just tip the needle a little bit, maybe 0.5% rise in property values over 3 years. Boy, were Treasury wrong with that. When you bring all these people in and give them money to spend, not at lower price levels, but virtually at medium price levels, around Australia's capitals.
And less constraints on income level requirements as well, Michael. So, it's a very generous scheme, which will be welcomed by first home buyers that really are consistently enthusiastic about entering the housing market. And why wouldn't they be this year, seeing that near 10% prices growth? Just speaking about, I don't want to be too disrespectful here, Treasury forecasts, we just have to look, unfortunately, at the latest inflation numbers just to see how, well, perhaps wrong Treasury can be in terms of their outlook, because we're seeing a concerning spike in inflation now, which really should have been predicted given the end of the electricity subsidies over the past 6 months. So that was always going to mean higher electricity prices, which is always going to work into higher inflation. But yes, many predicted another or a doom and gloom year for the housing market, and that's certainly proven to be completely wrong. We had all our capital cities, Michael, recording growth over the month. Top performers were again Perth and Hobart. They are up respectively by 2.7% and 2.6%. Which is very strong, of course. Brisbane again, which continues. Perhaps that's the market that continues to defy expectations, because it just keeps on growing. In fact, Michael, it might be interesting that Brisbane house prices this year, in terms of dollar terms, are up by around about $160,000 over the past 12 months to November. And unit prices are up by around about $120,000 in Brisbane, and still rising strongly. So that Brisbane market, again, another strong result, up by 1.8%. Adelaide up 1.6%. Darwin, which has been a booming market this year, up by 1.5%. Melbourne, which is clearly in revival now mode, Michael. I think it's beyond revival, but it's certainly picked up compared to where it was over the past few years, up by 1%. Sydney up 0.9%, and Canberra, the underperformer, up by 0.3%. And when we look at the annual results, Michael, Darwin, which, as I said, has had this remarkable boom period this year, up by 18.9% over the year. Brisbane, again, a strong year, 13.7%. I just equated that to its actual dollar increase. Perth up 13.3% and Adelaide up 10.7%. They were the leading performers. And it's interesting when we look at the 2-year performance for house prices, Michael. Brisbane is up 31.5% now over the past 2 years for house prices. and Perth, which has bounced back strongly this year, up by 40.7% over the past 2 years. So some very heady results there, we could say. Again, not unexpected, of course. And of course, Michael, driven by those 3 interest rate cuts earlier this year. Of course, we had a cut to official rates in February, May and August. Now some question marks over whether they were a little premature given the state of inflation going forward. But homeowners won't complain. Money in the bank in terms of higher house prices and always more demand than supply in Australian housing markets, and still plenty of momentum, as we've already discussed, Michael, not just from first home buyers, but generally buyers with that sort of fear of missing out, that FOMO energy still in our markets. And we saw that with the latest auction results over the past week. Again, strong on a surge in auction listings. So vendors are still quite happy to test our auction markets towards the end of the year. And that's, as I said, another positive portent for higher prices when we get the final results for December in a month's time. Markets also up over the November quarter versus the October quarter. Not quite as strong as houses, up by 0.9%. Units have been leading houses over the past few months, but a little bit lower. They're up by 0.9%. Now, the national weighted average capital city unit price is now up by 7.3% compared to the November quarter last year. A big rise in Darwin units, and that's a volatile data set. So we're used to seeing rises and falls on a month-to-month basis in Darwin because of fewer numbers of properties that do come through. And that's just an example of when we do have fewer observations, you can get a volatile data set. But up by 7.5%. Darwin, Hobart up 2.3%. Similarly, Hobart is a small unit market, so we can see some volatility there. But once again, that Brisbane market, Michael, just keeps on keeping on. Unit prices up again by 2.1%. Perth up 1%. Melbourne up by 0.8%, Sydney higher by 0.7%, and Canberra up 0.4%. It's interesting, Michael, that we've seen consistently over the past few months that Melbourne unit prices have outpaced Sydney unit prices. So that market is certainly on the rise in a comparative sense to that, consistently strong Sydney unit market. So another good result there for Melbourne. But Canberra, it drags the chain in terms of its unit market, lower by 1.9% over the month. So a little bit of a concern over just how that Canberra unit market is tracking. And the annual growth there in terms of unit prices, Michael, Brisbane tops up 21.2%, that Brisbane unit market. As I said, that equates to around $120,000, $140,000 over the year. Good news for Brisbane unit holders and unit owners. Darwin up 18.7%, and Perth up 17%, and Adelaide up 15%. And of course, Michael, a lot of those first-home buyers will be looking at the unit market as a destination to take advantage of that first home buyer grant. So set to rise again. And we mentioned the 2-year growth rates. Brisbane's now up 52.3%, Michael, over the past 2 years for units, but 44.8. These are remarkable figures, Michael. You've always got to look twice at them just to say, well, is this accurate? But it is. And Adelaide up 37.6%. And the Melbourne unit market's up 9.2% so far this year, Michaels. Who would have predicted Melbourne up by 10% perhaps over this year? Well, I think we discussed the potential for that. Yeah, off the back of low interest rates, because the Melbourne market has offered remarkable value because it really stood still while other capital cities were moving through that lower interest rate period of a couple of years ago. And it's certainly in catch-up mode, particularly in the unit market. And it's being driven, as we mentioned in our last podcast, Michael, we're now starting to see higher rents coming through from those low vacancy rates, which was almost inevitable. And as we also mentioned in our last podcast, we've seen a big surge in investor lending this year, obviously attracted to the lower prices initially, but also rising prices with that capital growth. So I guess what we need to do now is to look to the future a little bit, Michael. We'll do a full review of 2026, but certainly this is a good stepping stone for another positive year in 2026. We won't likely have the interest rate reductions that we've had this year. As I said, perhaps a little premature given the latest inflation data, but nonetheless, given perhaps the perhaps the easing of the business cycle, the moderation of the business cycle, which is what we would expect anyway, given 2 years of very strong, particularly labour market activity. I'm not sure we're in the realms of having to discuss higher interest rates. There will be some scaring going on in regard to the prospect for higher interest rates. But I think the Reserve Bank would want to tread warily in regard to higher interest rates impact on the labour market particularly. And it would really be an admission that perhaps they went too low too early by having to increase interest rates. So I think a steady year going forward. And I think there's still, as I said, plenty of momentum in the market, particularly for first home buyers and investors. And as long as that momentum is there, it'll create capital growth and it just feeds on itself for increased activity. But I'm not sure we're going to see another 10% increase in house prices next year, Michael. But I'm still...
Well, Andrew, I think that's a really important message you're finishing with, because I know there's two groups of people out there. Some are wondering, hey, is it too late? Have I missed the boat? And the truth is the bottom of the market was the beginning of 2023. Others are getting overly concerned in the other direction, fear of missing out. But I think there's a steady path in the middle. We are going to continue having growth over our property markets next year, not as strong as this year. I agree with you. Affordability is going to be an issue for more people.
Yeah.
Interest rates don't change and wages aren't going to go up as much as houses. But I still see a year of opportunity ahead, Andrew.
Yeah, absolutely, Michael. And as I said, I think that, the markets have been bolstered by that low interest rates and perhaps, prematurely low interest rates, but, sort of who cares, because it's activated our housing markets, prices are higher. But what that does is eventually, as prices get to the point without the drive of either interest rates or wages, they start to balance out, because we have a very fixed environment in terms of our housing markets because of the lending environment, because we can't overborrow because the banks won't allow us to do that.
Yes.
If you don't have
That's
a higher
something else
wage
to discuss.
Well, if you don't have a higher wage or a lower interest rate, you can't afford to pay more for property. It's just that fixed environment. So that's why we see the price cycle start to ease if we don't have either of those drivers going forward. But as I said, I think with this data shows there's still plenty of momentum in our housing markets. We will have the holiday break. And as we usually see, housing markets pick up when we do get to February from where they left off at the end of the year. So, but we'll discuss that going forward at a later date, perhaps, Michael.
Sure. Well, thank you. I think that's a great wrap up for the month of November. And I think today's discussion makes one thing absolutely clear: despite the noise, despite the constant headlines predicting doom, Australia's housing markets remain fundamentally strong around all the capital cities, including apartments. They've done really, really well. So the takeaway is we're in a market where opportunities still exist, but you need to be strategic. You need to be informed. You need to avoid the traps that catch so many trying to time the market based on short-term commentary rather than long-term fundamentals. We'll be back each Monday with our regular Property Insiders chat. And in a couple of weeks, Andrew, I look forward to the end-of-year wrap-up and your forecast for 2026.
Thank you, Michael. Something to look forward to.
As you could hear in my chat with Dr. Andrew Wilson, 2025 is going to finish off as a great year for property owners and investors, people interested in the property market, and it's setting up the scene for another good year in 2026. The same forces are going to apply, especially in the first half of the year, with the first homeowner grants, increasing confidence, not enough supply for the demand that's there. So how did you go in 2025? Did you take advantage of the markets, whether you're an investor or a home buyer? We'd love to help you plan to take advantage of 2026. Now, I know there's only a couple of weeks left, but why not have an initial chat to understand your options with one of the wealth strategists at Metropole? And let's explain to you what you could do, where opportunities are, and just as importantly, what not to do. By the way, we don't sell property, but you may have heard recently that Finder's 2025 Customer Satisfaction Awards voted Metropole as Australia's most trusted buyer's agent, Australia's most recommended buyer's agent, Australia's most loved buyer's agent. Now, I like that one, but we're much, much more than buyer's agents. But why this matters to you is it's a nice recognition, but that's not the end goal for you. This simply means you can feel more confident that you're working with a team that other Australians have already trusted to help them make big financial decisions in their life. whether it's buying a home or an investment, because we're much, much more than just buyer's agents. We help our clients safely grow into generational wealth strategically. So we start off by giving you strategic property advice. Now, as I said, I know it's the last couple of years of the year and weeks of the year, and you're probably going to be a bit busy. Having said that, though, go to metropole.com.au, and I'll leave a link in the show notes, and just organise a quick chat with one of our wealth strategists to discuss your options, and if it works for you, lock in a time either late this year, early next year, to take advantage of our housing markets, and let us help you plan to become the person you plan to become. Regular viewers and listeners to this show know that each time I have a property trivia quiz where I give you a chance to win one of my books. Now, I've had 3 books just republished: the 20th anniversary edition of How to Grow a Multi-Million Dollar Property Portfolio, the 3rd edition of Negotiate, Influence, Persuade, and Rich Habits, Poor Habits. Now, interestingly, we're giving away hard copies of these books, not ebooks, not Kindle books, and 3 people each week win a book. So go to propertytrivia.com.au, leave us your answer to the question I'm about to ask. And by the way, don't worry if you're watching this show a little bit late or listening to this a little bit late. Your entry will still count because everyone gets an updated property report. I've just updated the report of what's ahead for property in 2026. So, true or false question: the average Australian home today is almost 3 times larger than the average home built in the 1950s. True or false? The average home in Australia today is almost 3 times larger than the average home built in the 1950s. Go to propertytrivia.com.au, leave us your answer, and you've got a good chance of winning one of my new books.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to pass on a message that imposter syndrome and, in fact, self-doubt never go away. Look, I've had the privilege of speaking to many successful entrepreneurs and investors, including many multi-millionaires, and I've spoken to them about their early years. We often discuss these things at Wealth Retreat, which we're holding on the Gold Coast at the end of May 2026, and you really should come. But when I ask them about imposter syndrome and their own self-doubt, their answers in general are remarkably similar. They say it never went away. It's still there. Now, this may surprise you. We often imagine that once we reach a certain level of success, these nagging feelings of inadequacy and self-doubt magically disappear. But that's not how it works. Even the most accomplished individuals, those with significant wealth, successful businesses, a strong property portfolio, a good track record, they still wrestle with the feeling of being frauds at times. But the difference between them and the average person is they've learned to act despite it. Every year, as I said, I get together with 80 to 100 successful business people and entrepreneurs at Wealth Retreat. And these are individuals who've already made it. People who most would assume have unshakable confidence. And yet behind closed doors, they openly share their moments of self-doubt. They still question whether they truly deserve their success. They still wonder if they're good enough to keep pushing up to the next level. It's comforting to realize that feeling like an imposter is just part of human experience. So you're not alone in this. Even those who seem to have it all figured out are still battling with that little voice inside their head. The truth is these feelings never truly disappear. But what sets those individuals apart is their willingness to keep going despite the fear, despite their doubts. They've learned that action is the best antidote to imposter syndrome. And they don't go alone. The most successful people understand the value of surrounding themselves with like-minded individuals who uplift and challenge them. That's why they invest in mastermind groups, coaches and mentors. They know that having a strong support system is crucial for pushing through these moments of self-doubt. So if ever you're not feeling good enough, remember this: you're in good company. Every successful person you admire has been there too. The secret isn't to eliminate self-doubt, it's to keep moving forward in spite of it. Because the ones who win are those who acknowledge their fears, learn to live with them, lean into them, and take the next step anyway. So that's my mentorship message, my mindset message for you today. But why not check out wealthretreat.com.au and get in with the right crowd of successful business people, entrepreneurs and investors. I'll leave a link in the show notes, wealthretreat.com.au. It's our 20th anniversary this year, or in 2026, of Wealth Retreat, where you'll be in the company of a group of very successful owners of property portfolios and businesses, people who want to take their investment to the next level, but also want to be around other like-minded people. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. And I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?